Hey guys, it's Dale here from theforexguy.com with another live trade video walkthrough. So in these videos, I usually like to just, give you guys a bit of an insight to how I'm trading, what sort of techniques I'm using, and just give you especially if you're a newbie, just sort of like that realization that trading doesn't have to be as hard as many people are making it, especially on the technical level. Psychologically, that's a different story, but technically, when we're working with the charts, it doesn't have to be complicated at all. So today I'm taking a bearish reversal signal. It is, I guess, considered to be counter trend here. I wouldn't really say the market's trending at the moment. I'm looking at the Australian New Zealand dollar daily chart here on the 1st of February 2016, and what we've basically got here is this bearish reversal candle, and what I'm basically going to do is sort of build some value into this trade, build a case to why I should be selling this. First of all, we just check the level that the market is reacting with, and if we look to the left, we can see that this level here was a previous market structure support. So we can see it was fairly respected there as support recently, I guess within 6 or so months of price action data that we've got on the screen. So it's a fairly recent level. Then the market came down, broke through there. So it broke through there, come back up, used as a swing level, tested it as a new resistance level. So old support was respected as new resistance. Got this bearish outside candle as well, right at that sweet spot, and we got that sell-off down there. Market came back up and made this confusing sort of like high here, which just really doesn't really test anything. I think it's more of maybe a bit of an overshoot by the market. Come back down, and now we've rallied back up, and here we are again, looking at this important level here. Now, let's just zoom in. We can see that the reversal candle, the reversal candle I'm looking at is a bearish rejection candle, and the anatomy of it looks good because the upper wick shows rejection of higher prices, so it does show that the market did, basically bounce off that level. And another thing I look out for is the body of the candle. It has a close that's lower than the open price, which gives the candle like a bearish body. It's what I like to see with these reversal signals. So, I mean, if this body was blue, meaning that the close price was above the open price, then I would not consider this as a good reversal signal at all. But because we can see that the market's come up, rejected those high prices, come down back to the open price, and then continue down lower and close lower for that day, because we're working on the daily chart. It's got a quite a bit of bearish authority into the anatomy of the candle there. One other thing I use is mean value analysis, and that's why I have the 10 and the 20 EMAs applied to the close price here on the daily chart, and they basically act as a reference point, so you can just sort of see, prices relative to its mean. And right now we can see that price is extended away from the mean, and that's usually an indication that like when you get the market aggressively move away from the mean, it's a strong indication. Like you get these gaps left behind like that, it's an indication that we can expect a reversal to the mean sometime soon. If you actually put the 10 and 20 EMA on your daily chart, and if you go back through your chart and have a look at the times where price has moved away from the mean and then made this big gap, you'll see that the market does sometimes correct quite violently to the mean. So they're basically my reasons for going short here. As you can see, I've already entered a sell, and they are basically the level is fairly strong. The anatomy of this candle is, got some bearish authority in it there, and also the gap between the mean and price at the moment here actually signals that a reversal is likely to happen as well. Also, one other thing I like to see is like, I guess we've seen this like strong up move, and then we've just got this massive sort of like bearish candle. I wouldn't say it's massive; it's a quite moderate sized candle, but it's sitting on top of a rally. Usually, when you get a rally and then a dramatic change in price action like that, so it's like all these bull candles, and then a dramatic change in price action. It's generally a good indication, a reversal is coming. To illustrate that point a little bit more, I can show you a mean reversion that just occurred on the US dollar CAD, and we can see here this is much more clear the point I'm trying to make. We've got all these bullish candles, and we've had this massive rally, and prices eventually accelerated from the mean, and we can see there was a gap in between there. Got that price to mean gap, and then we've got this massive bearish candle that was just sitting on top of this rally. It shows like a sudden change in price action, so all of a sudden we're bullish, all these bullish candles chained on one another, then boom, in comes this massive bearish candle, and then like extended away from the mean like that, and see what happened afterwards. There you can see that the next couple of days we had some intense selling, and the gap between the mean and price was quickly filled. So we can see that the bearish continuation is still, sorry, the mean reversion is still continuing, and this market is looking quite bearish at the moment. So I was talking to another trader about this yesterday, and I'd be quite bearish on this market at the moment. I'd be looking for the market to make a lower high and drop another sell signal, and that would be a good swing trade opportunity to get short here with this existing momentum. But let's remain focused on the Australian New Zealand dollar chart today. So I managed to catch a retracement entry. I was hoping to get in around about the 50%. Let's lock that up. I've got this 33% level here. Just ignore that. That was just for some back testing stuff I was doing. You can see the market did come up and test that 50% retracement entry right to the pip, and it was starting to see a slight bounce off there now. I've only just entered the trade not long ago, so it's really early days yet. I normally I would have got that 50% trigger, but because this it's Monday today, and because of the market open, I had to get up quickly for this one, and I was a little bit late. I only just basically got in and seen price around this level, and I just pulled the trigger on it. So I'm going to leave the video here, and I'm going to come back and show you guys what happened with this trade. Hey guys, Dale here, back with an update on this Australian New Zealand dollar trade. There's been a bit of progression here, and I just thought I'd put the video on and just let you guys know what happened. So I woke up this morning and just evaluated what's happened during the last session, and I noticed that we got this large wick last session on the daily chart, which does communicate that the lower prices were heavily rejected there, and just scaled down to the 4-hour chart and basically seen this this basically a buy signal here, and I'm basically going to use this buy signal as an early warning exit signal. As you can see, it's there it is there on the 4-hour chart, and you can see it's a bit of a level there too. So I think that the market's going to push up off this level. If we go back to the daily chart, we can see that I mean, this trade's worked out very nicely, but we can basically see that the market's just made this strong straight move down, and we haven't really seen much in terms of a correction. So that's good for the trade, but such a sharp sudden move down, obviously usually what follows is a sharp correction. So I'm going to avoid the emotion of being greedy, and I'm just going to read the price action and let it communicate to me what is likely to happen. And I think now what's likely to happen is we're going to see a bit of a push back up. So I'm just not going to be greedy, and I'm going to take the profit there. I took the profit this morning. Now, a lot of people don't know this, but I'm in the trade history here. You can see that it's a trade result. I'm just showing you here that it was a legitimate trade. This is my real account. Now, if you don't know this, but you can actually click this trade here, drag it onto your chart, and then it will highlight the actual trade structure onto your chart so you can see what happened. So here was my original target. Okay, that was a generous profit target. That was the previous market structure level. I thought that I could write it down to there. I still think the market is heading down to there, but what my plan is I'm going to wait. I'm going to wait for that correction to occur and let it unfold. Then I'm going to wait for the next sell signal to basically unfold on the next lower high. So the next swing low with a sell signal, I'll probably use that to get myself back into this market. But for now, I'm just going to let the correction unfold. I'm going to take my profit and walk away with this with some decent return. So I think I got about 1 to 3 out of this, 1 to 3.5 I think. So here's my original entry there, and here's where I exited. Here's my stop loss there. And remember, I had to put some. You have to account for the spread, so the stop loss has to go above the high plus the spread there. So it was quite generous with the stop loss. Look at my little Fibonacci risk reward measure tool there. What you got to do is line the stop loss up first, then you grab the bottom and line entry up with your actual entry about there, and we can see that we nearly got about 1 to 4. So basically 1 to, I'd say about 1 to 3.5. That's a 3. There you go. So 1 to 3.5, not a bad result. That's usually when I exit trades or take trades, at least with the risk reward, I'm usually looking to get at least 3 times my investment. I mean, you really do have to target 3 times your return. Otherwise, if you're screwing around with trades that just get you 1 to 1 or 1 to 1.5 or even worse, less than 1 to 1, I think you're really going to struggle to grow your account. It's going to take me less effort to grow my account by targeting these high risk rewards. Obviously down here I would have got probably about probably close to 1 to 8. But that's okay. Okay, I'm not going to, obsess too much, and I guess like some traders may like be, become in denial or something and think their trade's not working out, and may try and hold through here and hold through this potential correction. And that may work out, but for the moment, I'm just going to, just take profit here and walk away with some money, and that's it. So also, if you're wondering what these marked candles are, I've got some candles that have got like lines through them. That's my battle station indicator. I don't think I've mentioned that yet. What it is, it's a candlestick algorithm, a detector that I've programmed myself, so it's got all my knowledge programmed into it, and it basically detects like the reversal signals and the breakout signals that we use. And what's so good about it is you can actually set it up to send notifications to your Android or Apple device, so your smartphones, your laptops, your tablets and whatnot. And that's been really helpful. So it'll sit there passively scanning the market, and it'll just send you alerts. You can get email sent to you, however is more convenient to you. But I think the getting the notifications to my mobile phone, has been extremely helpful. I don't have to come back and check the charts every 4 hours. All I have to do is just let this thing go. It's pretty reliable. It does find, the good reversal signals, and I don't want to call it a signal service or anything like that. It's just a pattern algorithm and a candlestick pattern detection tool. But it does a pretty good job of finding good trade opportunities. It just sends you the alerts, and you just come to your chart and you just check them out and decide whether it's actually a good trade or not. So yeah, it's been very helpful. So look, if this stuff interests you, if maybe your trading is complicated, you're not really getting anywhere at the moment with your current strategy, and you would like to actually go back to basics, learn swing trading, learn price action, learn how to read a chart, or if you're interested in my battle station MT4 plugin, just head over to forexguy.com. Okay, it's all there. All the information's there. I've got heaps of articles. I've got more videos as well if you're interested in looking at some of my other past trades. And yeah, I look forward to seeing you around the site, and I'll see you guys in the next video.